Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Oh, g'day, how you going? Phil Tarrant. It's that time of the week again for the Smart Property Investment Show. I hope you're well, wherever you're tuning into this or listening to us, whether you're on the YouTube, Spotify, Apple, all the different podcast players out there these days, and also video. I hope you're well. I hope you're engaged. Hope you're sort of trying to get a hold of what's happening on with the world. We've seen a whole bunch of stuff coming out of the US over the last few days with Trump's tariffs, and we've seen share markets in absolute free fall. I think here in Australia, the paper this morning told me yesterday was the worst day on the share market in 5 years here in Australia. So it gives some sense for what's going on and how the impact of decisions made in many, many, many miles away can have a flow-on effect here with our local markets and local economy. That said, I haven't seen property fall at all over the last day or so, because it's very hard to work out whether or not property has fallen or risen any given day. It's tough to look at it on a daily basis and see how it's tracking. But what I do know, traditionally and historically, property is a great performer. And often when you see markets in tailspins like you see right now, you see a flight to property. And whether or not you're going to see that sort of moving forward as people look for the consistency of property, we'll wait and see. We can chat about that today, plus a whole bunch of other things. But I've got someone back in the studio. He's last time here was about 18 months ago, late 2023. We had a really, really good chat. I enjoyed it. We're going to get stuck into it today. Really having a look at the different types of buyers that we have in the market, property investors. And there is a cohort of athletes who like to put their money in property rather than frittering it away on toys or in the share market. So we're going to get stuck into that, but also the mindsets of athletes and how it's very similar to what you see professionals do, and how you can capture some of these ideas to help shape your attitude as a property investor. James Nelis from the Nelis Group. Welcome back.
Thanks, Phil. Thanks for having me.
So Nelis Group, that sounds a bit important.
Oh, we'd like to hope so.
You thought long and hard about that business name?
No. No. It's you see a lot of it in the real estate industry, right? Like a lot of people utilising the last name Group, start to bring in people together and sort of pair that from a branding piece. So I think it was quite a straightforward decision for me.
It's pretty easy, right? Was it all available? Like
it was, everything's available, and particularly having a unique last name can make things quite unique in a way as well when you're looking for domains and business registrations and that sort of thing.
So what? Like, I've never heard of the last name Nelis. Like, what is it? Just did someone get mixed up in Neil and S and sort of merged it together?
Chatting to my family, I think it's like a adaptation of Cornelius. Okay. So then I don't know where that all sort of fits
way
through.
Back when.
But then people sort of change names and tweak things around it. Yeah, and that's just where it is. It was actually quite challenging in high school. Like a lot of people would be like, "Oh, Nelis," and you get in arguments with your teachers, and they're like, "No, it's Nelis," and it's like, "Well, no, it's Nelis." And they're like, "Well, that's how it's pronounced and spelled." It's like, but that's just how it is. And yeah, sort of go by both, but yeah, it's technically pronounced Nelis.
Okay. Nelis Group, I like it. So you can go to nelisgroup.com.au and
yep, exactly right. And that'll be straight there.
What's saying on your website? Is there a picture of you sort of saying, hey?
Yeah, it's a picture of me, a little bit of an overview of the business, a few videos. I think there's a clip from us from last time we were on there.
Yeah, very cool.
Yeah, it's
I enjoy catching up. So for those of you who didn't tune into this, and it would have been about late like November 23 maybe.
Yeah, late 2023.
I'm guessing.
Yeah.
Which, like, fast forward, like it's 18 months away. 18 months ago, when we caught up, we had a good chat about this sort of intersection. You being a sort of a reasonably good footy player,
yep,
with a day job as well, who found yourself investing in property as a way in which to create wealth, and now you've made it your profession, which is great. And we get stuck into that today. But what's been happening over the last 18 months? Anything to report?
Yeah, I think from me, and when we were on the show last time, I was aligned with another buyer's agency, Investigate, where I'd gone and applied my trade and learned everything about property investing that I'd learned theoretically being an investor, and then was able to fine tune those skills and that mindset and attitude, and have now transitioned out into my own business from the start of last financial year, and extremely grateful for that opportunity. And I always wanted to run my own business as a buyer's agent, but I also didn't want to go out on my own and make mistakes or not know what I was doing. So I strongly believe in being trained and education. And that's part of my philosophy as a buyer's agent, is educating clients on how to do this. So that sort of stuck well with me as a value piece, and I wanted to do that before I eventually went out on my own and started my own business.
Well, I would say that what a great place to learn the craft and the art of being a buyer's agent under, I guess, stewardship of someone like Arjun Paliwal, right?
Yep.
Really good operator, and
Absolutely.
and no doubt that apprenticeship there will probably serve you very well moving forward. So, you got your own business now. 100%. This is it. You're all in. First full year of trading as a buyer's agent under the Nelis Group. So you're probably not buying property at the moment because the banks might not want to lend you money until you can show at least. It's a bit of a misnomer in this as well. One good year of financials, you can start buying again.
Absolutely.
Yeah.
And that's the conversations I've had with my broker is that, there's that misconception that you need 2 good years. And there are some banks that say, no, we need 2 years. But then there are other banks that say, no, 1 year is enough. So that also helps you formulate your strategy and revenue targets that you need to go through to be able to hit, so then you can lend. And conversations with my broker has been around, well, if there's a year that you want to buy, well, we need to do this. We need to do X to achieve Y net profit, so you can do Z purchasing or refinancing that you want to do. Maybe the next year, will we look at things a bit differently and you don't need that kind of a profit, and we can reallocate expenses accordingly with your accountant. So it's all case by case, and I think everyone has their own lending challenges.
Yeah.
Whether you're PayYG, whether you're a business owner, or whether you're an athlete, you have different lending challenges, and we all go through it. It's about building the team around you to be able to go and execute it, and people who know what they're doing.
So the main game for you now is probably not investing; it's building your business. So
Yes.
that's taken a priority. That's where your decision making is based around building the best buyers agency business you can, and lending and probably investing is secondary for the moment.
Yeah,
Which
and
is okay.
Exactly. And people can say, well, yeah, I haven't bought property for a couple of years, but then I go, well, yes, that is true, but I have invested in my business, and that is an investment for me in my financial future. So some people are like, well, you need to do it together. You need to be buying property regularly, and yes, that is correct, but you can't do everything all at one time. You need to prioritize what's most important to you. And for me, the last 12 months has been prioritizing growing my business. So then next financial year, I can go and make multiple purchases and execute on that part of my investing strategy.
And you have to remind me, what was your job before you were buyer's agency?
Yeah, so I worked for a subsidiary company of the AFL doing
That's right.
education and training.
Yeah,
so
I remember.
was like remote training for young people, providing them an opportunity to get started and get into the workforce. And then I also spent 8 years working for the AFL directly as well.
That's right. I remember. So you've seen warts and all, the
Yep.
the mindset of a professional athlete,
Yep.
right? And most people have sort of got anecdotes around what they think professional athletes are like. And you know what? A lot of it's probably true, that they
Yep.
might not make the best financial decisions. I'm generalising here. So I know a lot of people that play a lot of sports, so don't give me a hard time about it. But I am generalising. So no doubt you can dial into the experience that we had working with those athletes to try and, expand that out into other high-performing people. And I think that's really, really cool. Are you enjoying it? Like, do you get up every morning and just go, let's get stuck in?
Yeah, I think the thing I love the most is being able to build a business, and I obviously love property and helping people transact in property. So being able to pair them both together is what I get a real kick out of. Like I remember growing up, always wanted to be a CEO of an AFL club. And then I quickly realized, I was like, okay, that's not what I want to do, because you're not creating a business of your own. You don't have full ownership. There's shareholders, boards you need to report to. So for me, being able to grow my own business and grow a buyer's agency, plus pairing that with a passion of property investing is sort of utopia.
Pretty cool.
And
You're still
cool.
playing footy? You're still in
Nah.
good nick, so you're doing something.
No, I've jumped on the quite a common bandwagon for a lot of people in the running space.
Okay.
But yeah, no, not playing. I don't think I would be able to run a successful business and play footy at the level I was playing at right now. That's something chatting to a few friends about, maybe playing a game of footy or two here or there down the line. But
That's when you end up in hospital for a broken leg.
well, that's right.
I've said time and time again, old boys getting out there. We're not an old guy, but
The footy club rang me last weekend wanting me to play because they were a bit short, and I was just like, nah. I'm running a lot. Like I went and ran 17 Ks on the weekend, but I would do my hamstring trying to change speed. It's just a different type of fitness that you need, and yeah, my body's just gone into the casual athlete now that goes to the gym, runs, still fit and healthy, but it's just a different type of fitness.
So with your buyer's agency, then it sounds as though you've got a point of difference in that you know who you want to be servicing,
Yep.
and you can really adapt the mindset of the person you're working with because you've been there, you know it, and you sort of you get it, right? And athletes sometimes, and high performing people, irrespective in business, you see the world, they're all a bit sort of, wired a particular way. How would you sort of frame what the Nelis Group does? If you're going to sort of give me sort of 3 or 4, points of difference or something which would make you unique compared to maybe some other operators out there.
Yeah, so a lot of the clients that I work with are your mum and dad investor, or they're a working professional, and they generally, a lot of them don't want a monster portfolio, a 20, 30, 40 property portfolio. A lot of the people that I'm working with are busy professionals that are looking to scale out a portfolio of somewhere between 3 to 5 or 6 sort of properties. And being able to work with those kind of people is good. And they are wanting sort of your set and forget kind of assets, and they're putting their money to work for their future. They're not wanting to get out and do your sweat equities, getting out, putting some renos in. They just don't have the time. So it's being able to provide them with the right market that's going to serve their purpose over a long-term horizon, and provide them a good quality asset that they're not going to have to worry about putting a reno or a kitchen through in the first 3 to 4 years.
And you hear that a lot. There's a lot of hype around property investing and being like really active with it, where you can do this and here's a hack that get you this and that and the other. But most investors will understand it, and we're going to release this. We did a big reader survey on, or listener survey or viewer survey on smart property investment the other week, and some of the information that come back was really interesting. Yes, you can get absorbed and obsessed with really this active investing and everything because of what you're seeing on social media. But I think most people and our research has shown are people like that.
Yep.
And I would probably fall into that bucket. Busy professional. Like, I don't want to, on my weekends, I don't want to be looking at property. I don't want to be renovating property. I don't want to be messing around doing that stuff. I want it to be a carriage of manufacturing wealth for me with as little as involvement as possible, right? And no doubt that probably resonates.
Yeah, and like we all get caught up in the hamster wheel of social media, right? Like we all get caught up in the news.com article of the young person who's done well, and that is absolutely excellent because they've done that. They've made extreme sacrifice, and a lot of the people that I'm working with, your mum and dad investor, they don't have that level of sacrifice. They're not aggressive that they want to go out and do something, and that is absolutely okay. And something I really the message I want to get across is we're all on our own journey. So what you see on social media might not be what you want. I met with a guy yesterday, and we were having a discussion around his passive income goal, and he was looking at around 100K passive income, and he goes, if I got that, I probably wouldn't stop working. So like, what would I do with the money? So it's working out what you individually want and not caring about what Johnny or Sally down the street have got, and go absolutely after it and pick your strategy, pick your plan, and commit to it.
And that's probably not that dissimilar from being really good at sport,
No.
I would imagine.
No, it's not. And athletes are the same. Like when they're playing, they get caught. If they get caught up in reading the media headlines about how their performance is or how their team's playing, that doesn't help them from an outcome perspective and get them to the goal they want to get to. So a lot of this stuff, whilst it's going to have an athlete flavour to it, it's very resonatable or very likeable to your busy professional, your busy mum and dad who has that kind of goals or mindset as well.
So what would be some lessons from sport do you think translate into investing?
And I think probably that first one there would be around like discipline. So understanding that you might purchase your first property and you've got this big high that you're like, oh, how good's this, how good's that? But then that reality sets off. You get into the routine of being a landlord and you're dealing with your maintenance, you're dealing with your rates, and time passes. And then it comes up to your plan. You catch up with your buyer's agent and they say, right, it's time to do a plan. You go, oh, okay, right. I've had this, I've had that. Right, I need to go again. And it's no matter what is going on, media cycle-wise, interest rates, tariffs, whatever, if it's a part of your plan, you stick to it. And it's the same with an athlete, is you look at, from a season perspective, how do we get success? We need to win X amount of games to play finals. I've got to turn up to training every week, whether we like it or we don't. That's our plan. That's our strategy. We turn up and we just keep sticking to what we know and what we're good at. That will get us the desired outcome.
That's sort of largely aligned, and I was sharing this the other day on the podcast, in sport or property investment, discipline trumping motivation. Absolutely get that. But discipline, if you stay disciplined, which means that you stay connected with the process, and the process and the procedure will typically determine the outcome. And with sport, the discipline would be getting up to do your training, all that sort of stuff, and the same analog in property investing. But if you do that stuff every day, the outcome should sort itself out.
That's right.
But you need motivation often to get started.
You do. And the best results come from that consistency of showing up, even when that excitement wears off of, I've got my first property or I've just settled on my second property. Like the boring buys, steady growth, regular reviews of your portfolio. And I mean boring buys by, like we were saying, those stock standard properties that are good, clean, functional, ready to go. You don't have to get in with a paintbrush, roll some carpets out. They sometimes get you the best results, and that's where the real gains do come from.
And I guess it's important in sport, as it would be in property investing, is you can't be blinkered or you can't be sort of closed. You've got to be highly engaged and connected with the people you're using or supporting you to do what you want to get done, right? You got to listen.
Yeah, you do. And you need feedback as well. Like athletes, they take feedback, or they are in an environment that is highly feedback driven. So it's the ability when you're out on the field to be going, hey, Phil, you're not doing X, Y, Z that we need you to do to help us perform. And then that comes from coaches. They're in this heightened environment where feedback is everything. And it's the same thing in property. You surround yourself with a team of your brokers, your accountants, your property managers, and you need to be able to give each other feedback. Because if you don't have that, you can't get clarity on where you're going to work yourself forward to your goals.
And sort of a similar vein, what I would say around property investors, and I would like to put myself into this pool using a sporting analogy. Yes, feedback's important, and you've got to take that feedback on without. It might annoy you every now and then, and that's okay, and it's good to have maybe an emotional connectivity because it should spark change. But the key thing is that you need to be coachable.
Yes, you do, and you need to be open and willing to accept it as well, because and from my perspective, that's why I work closely with my clients and plan to work closely with them over a number of years, because it's not just one deal. We get done, we move on. We give them feedback around rent suggestions. They get maintenance queries. Like one example from a client was they rang me a few months ago. They got a letter from the neighbour solicitor asking to split a fence cost. And they're like, how do we do that? So it's providing them feedback. They were nearly willing to go ahead and do it. And I was like, hey guys, like it's a pretty meaty cost. Let's get your property manager to get you some more quotes to look at, see if we can find a more cost-effective way to get the job done. And
again, if you're not listening to people, you're going to make mistakes, and particularly orientate yourself around where you're actually going as a property investor. Because I see a lot of people. I just started investing in property. I don't really think about what the end was, but I think things have moved on quite a lot these days. Are most people happy? And again, using a sporting analogy, like in sport, a goal might be to win the grand final.
Yep.
And so that's the outcome you want, and that could be that could be seasons away, right? And you see certain teams, they'll go, we need to rebuild so we can win a grand final in 3 and 4 years. So we need to make decisions today to help us get towards that outcome. Property's exactly the same, right? You need to know where you're going, otherwise it's hard to stay the course.
Exactly, and that's why we look at things from a whole portfolio view. Is like we said, so a lot of clubs, if they go, well, we want to win a premiership in the next 3 to 5 years, we need to look at our list, being our players, and where are our opportunities to turn the list over to out with the old, in with the new. Same thing from a property perspective. We need to look at your portfolio as a whole and go, well, do we have some underperforming properties? Do we maybe need to move them on? Or do we have properties from a rent perspective that are underperforming? How do we get them or optimize them for the benefit of us achieving our goal, possibly in 3 to 5 years' time, or in property, it's 30 years' time?
You don't always win in sport.
Nope.
Just like you don't in property. How did like working as a pretty good footy player, and also in and around sort of high performing footy players, there's an acceptance that you're going to lose, right? But you don't sort of train for the idea of knowing you're going to lose. And everyone throws around the term resilience quite easily. But how do you have a relationship with losing?
For me, my relationship with losing is, and that's the thing. Like for me, from a mindset perspective, I don't see it as a loss.
Yeah.
Every roadblock or setback that comes through to you is an opportunity to learn. So I believe you need to make mistakes to get better. And if you're not making mistakes, you're not learning, or things are too easy. And it's like, well, when that reality check comes in, hits you in the face, you're not ready for it, and you throw the baby out with the bathwater, and you give up.
Losing a game of footy is one thing on a Sunday or a Saturday. Losing in property can probably have much more
Adverse
significant
effects, yeah.
ramifications. And I guess there's different layers of losing. You
Correct.
might lose out on a deal. You know,
Yep.
you might lose out because your interest rate went up and you're like, woe is me. But losing in property, if you lose, you could really lose.
Correct. But that's also why if you surround yourself with the right people in terms of your team structure who have been through it before or might provide you a different perspective to go, hey, well, yes, this has happened, but how can we turn that negative into a positive? What are some things we can do off the back of that to either, one, rectify it or move you still move you forward to where you want to go?
Yeah. And I guess knowing where you're going is absolutely key, but you can deviate from that every now and then and lose focus. And that happens just because there's more noise coming downstream. You don't know what's going on. Interest rates go. All the reasons why can throw you off course. What do you find is the best way to maintain focus or get yourself back into focus as a result of some of the challenges or changes that you're going to face as a property investor?
I think it's look about where you've come from to where you actually are, and that a lot of people probably aren't in the same position as you either. So it's, oh, well, I wanted to buy a property this year, but due to X lending policy or this, that, and the other, I wasn't able to do it. But then we look at the stats of people who own property. You lose sight of where you actually are being in the fortunate position that you are in compared to a lot of others who haven't got on the property ladder or can't get on the property ladder. So I think it's all utilising hindsight, perspective, to sometimes just take a reality check and go, well, yeah, I couldn't buy a property this year, but okay, well, I will next year. It's not all doom and gloom like sometimes a lot of people do make it out
We
to
need to
be.
be mature about that as well. And again, you can't compare, sort of referencing what you're saying before, you can't compare your chapter 1 with someone's chapter 7, right?
Yep.
And it's much easier to do that today because you're fed through a fire hose of social media successes. And I tell you what, the only things you see on social media to do with property are the good stories, right?
Exactly.
Much like a sporting team, much like most investors, there is also bad days, and then there's also potentially dark days for people, right? You know, different shifting sands of what bad can look like in property investment and or in sport. So, you know, if you're only fed the good stories, sometimes there's a conditioning that things always go right in property. And I tell you what, it's not the case.
And even those good stories, they're still small percentage of the good stories as well. Like they're the best of the best of the best stories as well. And there's great people around. And that's, like I said, a lot of the clients that I'm working with or want to work with, they only want to own 3 to 5 properties. That is still a great outcome and still needs to be celebrated more as well, because not everyone can buy a property. It's a fortunate position to do it.
If you buy 4 to 5 properties, you're outperforming the market.
Exactly.
By some margin.
And that's where and some people do want, like I said, they want to have the mega portfolio, and that's fine. But there's majority of people want to have a good, sustainable portfolio that they don't want to be an aggressive investor. They want to be a passive investor, and that they just want to look after their financial future and know that they're safe, continue on with their life the way it is, for the benefit of them and their family, and have a great, happy retirement and not have to rely on the pension.
So do you find that you attract then a particular type of customer because you sort of no nonsense, real sort of no BS type approach? You're not selling,
no,
inverted commas, this but back to sport, not everyone could be a Michael Jordan.
No.
All the other NBA players are all very exceptional operators, but it's only 1 or 2 who really rise above the ranks to be, outperforming everyone else.
And it goes back to my previous roles in working in training and education, is I want to educate my client on the end-to-end process of buying a property, because at the moment affordability is a big thing, and not a lot of people can afford to buy in Brisbane, Sydney, Melbourne, Adelaide. So they need to go to a regional area. So it's, if you go and transact on a property and you don't know what's going on, and you then stand around the next barbecue and you go, I bought an investment property, and then Phil Tarrant turns around and says, oh, well, where did you buy? And you go, oh, I bought in Toowoomba, or I bought in Townsville. Oh, why'd you buy there? I don't know. The buyer's agent said it was a good area, so I bought there. If you can't articulate why we bought in the region, what makes that a good property as opposed to the 3 or 4 others that we didn't look at, you're kind of sitting there with a bit of egg on your face, because it's the largest financial transaction you're probably ever going to make. So you need to understand why it was a good property, why it was a good region. And that's part of my sort of philosophy, one of my values, is educating people why we're doing things, how things have transpired and how we've gotten to where we are today. And people turn around and say, well, are you just going to make yourself redundant? People going to go and then want to do it themselves? And sure, all power to you. Like you can do that. And that's absolutely fine. But the reason why I'm getting repeat business is because of that educational element. People value education. They value learning, understanding, and then you obviously get results for them. You save them a hell of a lot of time, busy professionals.
I challenge everyone to look and consider themselves that decision maker around the property. If you say, I bought in that place because my buyer's agent told me to, like I'd say you're probably not doing this right. You've got to be, the one thing that you need to be is accountable for the decision making. And your buyer's agent will make recommendations and they'll give you the insights and the support to do that. But still, you need to interrogate the opportunity and you put your name on the contract. You're responsible and accountable. Because you can't go, oh, my buyer's agent told me to buy this, so I sort of went around doing it.
And that's something I say to prospective clients, is that I'm going to facilitate this transaction for you, but you need to know what is going on and why we're doing it. I don't want to shelter information from people because we're in a knowledge economy. So people need to know what's going on. Property transacting is I find a lot of people, they don't know what they're doing. Like I've had guys ring me from footy wanting to buy their own home in Brisbane because up in Queensland at the moment, you can, under 700,000, you can do 95% no LMI. And a lot of people are taking that opportunity and buying townhouses and apartments and whatnot, whether that's right or wrong or a good investment option or a property option is not the topic of discussion today. But they'll ring you up and say, oh, I put an offer into an agent, but I haven't heard back. And I go, well, how'd you do it? They go, oh, I just texted them and I threw out a number. I'm like, did you put terms in? Did you send it formally over an email? Did you send an offer sheet? Have you followed up? And they're like, oh, no. And one guy did that and I emailed him a example offer. I said, look, send this to the agent, fill it out, put your details in, put these terms in, got a call back within the agent in 10 minutes. Yeah. Like it's that understanding.
This guy's serious.
Yeah, this guy's serious. This is how you actually transact in real estate. And I think there's a big knowledge gap there. And if I can help people do that, and if I do it for one of them, for one purchase for them, and they go and try on their own, that's all power to them. But the retention I'm getting is because of that knowledge, because of the willingness to share and not gatekeep information. People love that.
Yeah, it's absolutely critical. And going back to the survey we did for our readers and listeners a little while ago, the lion's share of people aren't using buyer's agents, right? And back to your point, if you're a property investor, you're doing all this yourself, that's cool. It's more common to do that than not.
Yep.
That said, you're competing against buyer's agents who do this for a living and therefore probably got a different capability and a different way of operating. So you need to understand that you're not just operating in isolation, you're operating in a competitive market. The buyer's agents are in there getting these deals, moving faster with conditions, serious stuff. They're going to move faster than you, but that's just reality of the situation.
Exactly. Like it's even an example of a client we worked with last year was our speed to transact on an on-market property for this client was what secured us the property. We went in, we inspected it on the Saturday, caught up with the client on the Sunday, went through the offer strategy, and I said, hey guys, felt out some pricing. This is what's probably going to get the property done. Client gave us the all clear. We put the offer in, got the contract, got it signed in front of the seller. Signed back on the Monday afternoon, had a secondary inspection because as agents do, it's under offer, they communicate that. And they had some secondary offers come through the following weekend that were considerably higher than our accepted offer. And once we'd gone unconditional, relayed that to the buyer and they turned around and said, oh, we're so thankful for that and you pushing us to put an offer in. Because to be honest, we probably would have got to Wednesday, Thursday, and that's when we would have put the offer in. Realistically, they probably wouldn't have taken the offer then. In hindsight, they know they've got another open coming on Saturday with more inquiries. And we were able to save our client a fair whack of money by doing that, just purely off speed to transact.
Speed is key many times. No, it's good. Well, there is a lot of commonality, with mindset, right?
Yep.
And I think we've really broken that down. But I want to chat about, your clients and again, putting perspective to stuff. So I hope you're enjoying my discussion with James Nelis from the Nelis Group. Now, you use your side hustle, playing footy, to help you buy your first property investment. So side hustles are cool.
Yep.
If it's actually augmenting what you're doing rather than it being an instead of, and you see it all the time. People, 5 days a week, then I get a side hustle and I go, I'll just dial down my work day, and they end up the same. So you're actually able to use a side hustle to get started.
Yep.
Investing in property, and this stuff is still as relevant today than what it was way back when. But you got paid to play footy, even though it wasn't a huge amount of money.
No, but it was an unconventional side hustle for a lot of people. So a lot of people, their side hustle is starting their product business online. They're selling a product or maybe some apparel or some of that.
Drop shipping.
Drop shipping, that's the one.
Yeah.
And for me, my side hustle was playing footy, but it was a game that I would have done for free, but I was able to earn a little bit of coin on the side, and that was able to pair that and add on top of my savings to be able to get into my first property deal. And then once I got into my first property deal, was able to pay for holidays and those sort of things, put a bit of less, I guess, financial pressure on me. And like I look at it, and I got paid at the highest amount of footy was around $800 a game, which is not chump change by any means.
$800 for an hour and a bit.
$800 to do, that's the thing. Like I say, it's $800 to do a game that you love, and you can do it for free. So why take advantage of that, or not take advantage of that for your own benefit?
Did you know what all the other guys were getting paid to play?
Not really.
Didn't matter. We didn't talk about it.
For me, like I look at it and go, well, I was a middle of the range player. Like I was still playing in the senior side every week, and like I was earning $800 a game. So, and there was guys that were way better than me. So I can only presume that they were earning over $1,000 a game. So we played 20 games a year. You get $1,000 a game. There's 20 grand extra through the hobby exemption.
It's meaningful.
Tax free. Like that makes a fair difference.
Yeah, it's going to help you get to a deposit faster.
Exactly.
If you don't waste it all.
Well, and that's the thing. It's something like you look at even, high income earners, low income earners. It's all about what you're left with at the end of the day. No matter how much you make, it's the same in business. You can earn $100 million a year, but if you're left with nothing to show for it, is it really worth generating that much revenue to have nothing left to show for it?
Yeah.
So it's the same thing that, whether you're a professional athlete earning $400 grand a year versus a semi-professional athlete making an extra 20 on top of their 80 grand a year, if you've got nothing left to show for it, what are you doing wrong?
Well, that's the old adage is, what is it? Revenue is vanity, profitability is sanity, right? And you're absolutely key. And you see it in business like PAYG type employees who may earn a lot less than their boss. However, the boss goes, how come you're able to invest in all this property and I'm struggling to keep the lights on, right? Because they probably spend a lot more money. It's what you're left is absolutely critical. And athletes in particular probably blow their dough.
Yep.
More than you must have seen it, like just extravagant purchases and thinking that the good time's going to last forever.
It's the illusion of wealth. You get thrust into an environment where you get paid for a hell of a lot. You've got a bit of downtime. What am I going to do? A bit of online shopping. I've got a lot of money. I'll buy a new car, which is a depreciating asset. It's that illusion that I'm wealthy. And if you spend, you've got nothing left at the end of the day to show for it. It's like, well, are you really that wealthy?
And your client base, and again, trying to put this into perspective, I would imagine they're quite average, if that makes sense. Like, people think property investors are making heaps of money, but you probably just see pretty normal incomes coming through, but the right focus and approach, dedication to actually go about sort of changing their wealth footprint through property. So normal is an average is pretty average.
Exactly, but they're taking action and they're wanting to better themselves. Like some of our clients that we're working with are doing equity releases, but then having to use a third tier lender and pay an extra 1.5% just to make a purchase deal, and they're going to be far better off than people that aren't making a move. And that type of stuff is not widely spoken about. And what a lot of average Australians have to go through in the current rate environment is they might have to deal with a bit of pain of a higher interest rate to get into a deal a year or two earlier than they would. Then they refinance away a couple of years later, and they're possibly into another deal by then.
Yeah. And you probably see it in sport quite a lot where you earn a high amount of income for a moment in time. And you sometimes see it in business as well, where you sort of hit your peak earning years, and there's a point in time where they go, well, you're earning too much now. We'll get someone else at a cheaper rate, right? That's when people normally get a tap on the shoulder and get made redundant, yeah? So this idea of, people can struggle financially after periods of earning quite a lot of money. Happens all the time.
Happens all the time because they also then get so attuned to spending at that high level that when the income drops and they're not ready for it, they basically go broke.
Yeah.
Like I think there's a stat in American sport, and yes, there's obviously a lot more zeros on the end of their salary paychecks than probably what there are here in Australia. But I think it's about 60% of all NBA players go broke, and 75% of all NFL players all go broke after their career. So it just goes to show that you can get stuck into that trap of overspending.
Yeah.
And it's probably a wider social issue is we spend a hell of a lot of money, but it's more if we focus on what we're left with at the end of the day as opposed to what's going out, we're going to be in a far better position.
So finance is pretty important.
Yep.
It's critical to property investing, and athletes, for example, can get some exemptions to help accelerate their ability to acquire property. And it's probably during that moment in time where they might get 3 to 5 years of earning a lot of dough where they want to shift the needle. Like that can make or break it, right? And you don't want to sort of get 2 or 3 years into a period of earning good money and you only got 2 years left. I've just wasted 3 years. What sort of financing solutions are available?
So generally there's some of the banks would be able to do a lot of deals around 90% LMI waivers, which is good for them for their first deal. And there has been some banking policy changes lately where some lenders aren't doing that as much. But it's then being able to work with a broker or work with a bank that's going to help you with deals 2, 3, and 4 and how you actually move yourself forward. So it can be quite straightforward for a lot of people. There's a lot of exemptions, a lot of waivers for people to get into their first deal. But it's how do you actually then get into your second, third, fourth, and actually
until lenders start getting a bit sort of nervous with
contracts, etc. Sort of thing. Because a lot of the athletes, it's a 2 or 3 year contract. A lot of sports, they get paid monthly. So you need 2 to 3 pay slips. It can take you 2 to 3 months to show your proof of earnings. So that can sort of hold things up a little bit there. So there's whilst a lot of people think, okay, well, you earn a hell of a lot, you're able to get access to finance really easy. It's like a lot of people. Every person in every segment of the workforce, PAYG, income, athletes, all have their lending challenges. We all do. We all go through it. You get through one problem, then there's the next problem in terms of lending. So it's being able to work yourself with an investment savvy broker that knows the policies inside and out, is able to lobby on your behalf to the BDMs, help you with your financing. And it comes down to, like we were saying, it's what you're left with at the end of the day. If you've got a lot of money coming in and you're not spending a hell of a lot, well, maybe you don't need to refinance or extract equity to then get yourself into deals 2, 3, and 4. If you're earning a couple of $100,000 a year, well, maybe I can rapidly save. Well, maybe I rapidly save my next deposit, keeps my LVR nice and low, and then I can build a really nice balanced portfolio from a debt level perspective that then when I do need to go and refinance, go, hey, my LVR is pretty tight and low here, off we go.
So you need to structure the deals pretty well then.
You do.
Right? Both from how you put the deal together, how you put the finance together, but also the entity in which you invest in, right?
And it's the same thing. Like in sport, you've got a coach, a nutritionist, a team manager, all play their different roles. So it's about surrounding yourself with the right person. So in your property investing journey, it's surround yourself with the right buyer's agent, the right mortgage broker, the right accountant, the right property managers that are going to help you move you forward to your goal, and let everyone play their role and do their role the way they need to do their role.
So what would be a scenario then for, you can help paint a picture for us what this would look like? Say it's a moment in time where you're earning a lot of money, right? And it might be contingent to a contract. And again, whether you're a sports person or it could be a business thing as well, right? Where, you may be moving into a CEO contract. CEO contracts often get renewed in large organizations, particularly if you're not the shareholder, if you're a paid sort of PAYG CEO, a lot of your time in a seat is going to be conditional on performance, right? Exactly the same as a professional athlete. So how would something like that come together?
Yeah, so that comes down to our modeling and our strategy piece that we use and the software that we use. So what we're actually able to do is forecast out their high income earning potential and then factor in the big drop of income back to what they probably anticipate it being post that contract ending. Now, every athlete's going to sit there and tell you that they're going to play for another 10 years. So what we do with our clients is we work off what is the known quantity, being the remaining length of time on that contract. because they get playing, they get injured, form hits them, club changes a different direction. They don't know what's going on after that contract. So we look at that. We're then able to forecast that massive drop in income and see what's going to happen to them from a borrowing capacity perspective. What are your expenses like? How does that then allow you to move forward? And if there's a large enough gap, or what we do is we optimize inside that window to go and buy well, how we structure that from a lending perspective. From, is it P&I loans on the highest debted property? Is it really focusing on building up the offsets accounts? Is it coming into the last year of the contract that we link back with the mortgage broker and we reforecast all the loans back out to help manage the repayment level once you finish? But then hopefully on the positive side, they keep playing well and they do what they're good at, which is performing in their chosen sport. They get another contract and we go, well, okay, let's review the plan. The contract's now this. And we just repeat the process and keep maximising that opportunity as long as they have.
And that's consistent with a busy, high-paid professional.
Same thing.
Yeah.
Same thing.
You probably move from contract to contract, or, if you're in your ascendancy, you may be shifting jobs and getting paid more in time, but there will be a moment in time when the tap's turned off for whatever reason. Performance, the world changes, strategy's different, the ball wants to go a different way, et cetera, et cetera. It's largely identical. You're just the mechanism of performance, and as long as you're providing and creating value, you can probably stick around. But as soon as you aren't, unfortunately,
and that's
what shop.
Exactly, and that's why it comes back to our constant reviews and check-ins with our clients, and actually giving that care for our clients, because they might then be in a position a little bit further on than what they probably thought, and how we're able to then help and provide and support them and map out what it looks like to move the needle for them in the right direction with the right strategy and the right team around them.
And in terms of building out a team for your client base, particularly those people who come from sport, they'd be completely conditioned with that. It wouldn't be a foreign thing to out. Like, you've got a coach that does this, a coach that does that. You've got a manager that this. You've got your medical and health people that do this. You've got runners on the field often telling you,
giving you
instructions while you're actually playing.
Yeah,
right? Like it's probably one of the best analogies for how to do property investment well is to look at it in that sense.
And that's a lot of the analogies that I draw from me in terms of how I go about my business and partnering with people that are elite professionals in their field, because that's bringing that with that mindset to everyday Australian. Everyday Australian wants to perform at a high level. So bring that to them, even if they're an everyday Australian, help them perform at that level, because then that can even translate to what they do in their workplace or their own life. Yeah. I think a lot of what we're talking about here is not rocket science stuff. It's basic fundamental stuff, but the hard part is just sticking to it and actually seeing some reward for it and actually willing to stay the course. Everyone wants instant gratification. They want it now, but they're not willing to ride it out the distance. And I think those people who can ride it out the distance are going to be the ones that are sitting on top of the hill at the end of the day.
Yeah, and you see your Nike adverts where it's always about the work that gets put in.
Was it the iceberg? So the duck on the water, where it's like all graceful on top of the water, but they're paddling
working
hard, working hard.
And your Nike ads are always the people getting up in the morning, running in the rain, and all that sort of stuff. It's the work that gets put in order to get the outcome you want. And again, it's absolutely critical. When you're working with someone, say they've got other support mechanisms around them, you must get a read pretty quickly whether or not they've got the right mindset, to work with you on these type of things. And sometimes you might need to say to clients, you might have outgrown that particular account, right? And it happens all the time.
It's hard, and it's about them, and it's the language that they're bringing, or it's even their tone of voice and the confidence they have in that particular professional. You can get a quite quick read on them. And it's even, sometimes a second opinion is so valuable. And you can then just say, hey, have a chat to this person, ask them, just pulse check. And a lot of people come back and go, that my original professional's telling me the same thing. And just go, great. Off we go.
Yeah. Interesting stuff. So, looks like you're all in now on Nelis Group. Yeah, a lot of analogies between high-performing sports people and high-performing property investors, but you don't need to be a professional property investor to be successful at it, and most of us aren't professional property investors. It's a very different game. Having a chat with James Nelis from the Nelis Group. Now, what's the future look like? You're just going to be, it feels like you found a home doing what you're doing right now.
Yeah.
This is it. It's going to be property now.
Yeah, I think this is it. Like, I think the property space is growing. Both sides of real estate. I think people are crying out for support. And like I was saying earlier, the simplification or even the general understanding of how to buy, there's a lack of knowledge and awareness around how to buy properly. It's the biggest financial transaction people make in their life. So being able to support people through that is great. And then now it's just for me continuing to build the team out around me, and knowing the people that I want to work with, which is high-performing professionals and athletes.
And you'll pick and choose.
Yep.
Yeah. And you set a burn at a particular temperature, which no doubt would appeal to certain people. Like, what you see is what you get.
Exactly.
Which is good.
And that's the thing. Like, we look at the buyer's agency space now. There's multiple people coming into the industry, and the people who have the right intentions, the right work ethic, do right by their clients, they'll get you the desired result you want. I'm not ashamed in saying that as long as you get a good vibe with the person, you get on well with them and you trust them and you're willing to stick with them and their plan and their strategy, they will get you to the result you want. And it's being able to then weave your way through that and work out who's going to help you the most.
And sport's quite easy to measure success. You went on match day and then you win the grand final, right? And that's sort of disconnecting the other aspects of success in sport. It's it's good for your well-being and mental health and all that sort of stuff, right? How like as someone who is a competitive person, I could tell you how do you acknowledge winning in property investing, doing what you're doing for a living now? How do you know you've done a good job?
As an investor or as a buyer's agent?
As a buyer's agent.
It's the satisfaction of clients and their feedback to you and how you're going, whether that's a Google review or the amount of clients that will drop you a message and say, oh, thank you, I'm so appreciative of your support. Like I had a client ring me yesterday, we went unconditional on a deal, and she was so wrapped, so over the moon that she was able to get into her first property deal. She had some ambitious goals. She wanted to started working with her, in January. And she wanted to get into her first deal by the end of April. And we were able to go unconditional on a deal yesterday. And what are we today? The 8th of April. So to be able to help people and achieve their small targets and small goals is what I get a real kick out of. And then being able to translate that into more and more people is what I'm about. I'm about other people as opposed to myself. My personal goals are my own, but I get a bigger thrill out of helping people actually achieve what they want to achieve.
And fast forward sort of 12 months from today, what do you think we'll be talking about when we're chatting about the Nelis Group?
Hopefully it's a lot of client success, but on the back of that, it's me being able to then bring on some more people who are like-minded buyers agents and support, which I've already got some support already, and they're terrific. They've got a great mindset and fit in very well to the team, but it's being able to bring those people on the journey to help us help more people.
I guess your sort of background in training and education is probably be supportive of growing out the team, right?
Yep.
And maybe this is the home for sports people, when they finish playing.
I'd like to hope so. And I think it's like a lot of investors. But obviously, I'm an investor, and natural progression for a lot of investors is getting into the space. So whether that I draw from my potential talent pool of future buyers agents for the Nelis Group, is that coming from my current client pool? Who knows? As long as at the end of the day, as long as they share the same values, the same work ethic, and want the right outcomes for the clients that I want to work with, then I think that's a win.
That sounds pretty good. Can't believe I just looked at my clock there. We've been chatting for 50 minutes.
Wow.
It's just flown by. Mate, thanks for coming in. I'm really, really happy things are working out for you, James. It's it appears you've landed on something with a particular focus and you're building out a business which resonates with your skill set and also how you really can be supportive to a whole bunch of people. So, mate, I wish you all the best.
Thanks, Phil.
Really
It's
cool.
great to be back. I look
Really
forward to
good.
doing a bit more now.
Yeah, well, you should do. It's I like the maturity of your thinking in that you're normalising what property investment is and you're sort of getting beyond the hype.
Yeah.
And I think people get sold on the hype, but I think, giving them a sense to calibrate exactly what it looks like to be a property investor. And back to the thing I said beforehand around the feedback we're getting doing our surveys, like it's really helped realign what this community looks like. And it feels as though you're servicing that community rather than the fringes left and right.
Yeah, and I think, and that's like the common people that you speak to. That's what they want. So that's the majority of the people that they don't feature on, the social media reels that go viral.
Yeah.
And I think those people need to be represented and they need a voice as well.
Yeah, that's good. So Nelis Group.
Nelis Group.
N-E-I-L-I-S.
Nelis.
N-E-L-I-S.
Correct, yeah.
Nelis Group. G-R-O-U-P. I can spell that.
Yeah, you can spell
N-E-L-I-S group.com.au. You can find you there. And
find me there.
people
James
track you
Nelis
down.
on all social media. Yep.
Yeah, okay. All right. Thanks, mate. Next time you're down in Sydney, let me know.
Yeah, let's do it.
Yeah, we can talk stuff through. Thanks for tuning in, everyone. Great to have people like James come to the show and sort of sharing how they see the world, and no doubt that will probably resonate a lot with you. Just the practical and pragmatic way about building wealth through property. It's no real secrets to it, but much like being an athlete or high-performing professional, consistency is key. And if you follow and focus on those things around repetition and doing and the discipline around it, typically the outcome will appear and sort itself out. So it's what we chat about on the Smart Property Investment Show. Hope you enjoyed our chat today. Remember to check out smartpropertyinvestment.com.au, social media, you'll find us. Just have a look around and track us down, like us, follow us, and please keep the reviews coming on this podcast, wherever you're tuning into, whether it's Spotify or Apple. I know James is going to do it when he's sitting on the plane waiting for it to take off this afternoon, and as well all his clients, because it's been a great episode. Thanks for tuning in. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.